This is already video number 12 of NPO accounting. And we're going to talk about the last topic in the NPO's accounting. So, before we start, let me introduce or mention again the classifications of NPOs that we have talked about in episode 1. So, we have HEVO. H is for healthcare organizations. E is for educational institutions. V is for voluntary health and welfare organizations. And O is for others. But why? It is because this other information that you need to know is centered on the unique accounting features of each classification. What I mean is that there are some accounting requirements for healthcare organizations that are unique to it. Meaning, those requirements do not apply to educational NPOs and do not apply to voluntary health and welfare organizations and others. So, also, educational NPOs also have unique requirements not found in other classifications as well. And voluntary health and welfare organizations also have some accounting peculiarities. And we will be talking about that. Okay? So let's start with others. So if we're talking about NPOs which do not belong to here, or not a healthcare organization, not an educational institution, and not a VWHO, like for example, a not-for-profit museum. So you just need to remember one thing, and that is everything that we have discussed so far from episode 1 up to this moment will be followed by these other NPOs. And that's it. Okay? Now let's go to healthcare organizations. So actually, there are two things unique about healthcare organizations. So let's have the first one. Let's talk about the financial statements of healthcare organizations. Because actually, these healthcare organizations should prepare the following. The first one is the statement of financial position, and we have the statement of cash flows and disclosures. But here's another one, which is the statement of operations in lieu or instead of statement of activities. Now, that's unique feature number 1 for healthcare NPOs, because all other NPOs prepare statement of activities instead of statement of operations. And if you have remembered, statement of operations focuses only on presenting revenues and expenses, unlike the statement of activities. So that's it for the unique accounting feature number 1 for healthcare organizations. Now let's go to the second unique feature of healthcare organizations, and that is its revenues. So unlike other NPOs, its revenues is composed of puno. So that's our mnemonic. So P is for premium revenues, U is for unrestricted contributions, N is for net patient revenues, and O is for the other revenues. And that's it. But wait, there's more. Actually, we need to discuss this one by one, especially this net patient revenues right here, since there is a computation for this one. So let's start with premium revenues first. So these are revenues earned because of capitation agreements. So what are capitation agreements? So capitation agreements are agreements with third parties based on the number of employees, for example, instead of services rendered by the NPO hospital. So we have here an example. Example, Baby M Hospital, an NPO, agreed to provide medical checkups to 100 Baby G's employees for 1,000 a month for each employee. So here, the premium revenue is 100 employees times 1,000, and that's 100,000. That will still be 100,000 even if less than 100 employees had undergone medical checkup for the month. For example, there are only 50 employees of Baby G who avail the checkup. Even if that's the case, the revenue of Baby M Hospital will still be 100,000. Okay? So that's it for premium revenues. Next is we have unrestricted donations or contributions. And I'm sure you are already familiar with this. So I'll repeat it again. These are contributions or donations with no donor restrictions. And that's it. Now, let's go to the one that needs the longest explanation. And what is that? The net patient revenues. So, we are already finished with the premium revenues and the unrestricted revenues. Now, let's have the net patient revenues. First, you need to familiarize the formula. So, we have here, to get the net patient revenues, we need to get first the gross patient revenues and less the CEB. So the CEB, we have the contractual adjustments, employee discounts, and billed charity care. And then you will get the net patient revenues. Again, the deductions to get the net patient revenues are the contractual adjustments, employee discounts, and billed charity care. But in order for you not just memorize this, but to also understand this, let's discuss each of these. So let's start with the gross patient revenues. Actually, this is self-explanatory. This is just the total billings of the NPO hospital to all its clients or customers. So next, we have the contractual adjustments, which is the total billings to patients less third-party payers reimbursement. Nose bleeding, right? But it will make sense if we put it in an example. So we have here in an example. So we have Baby M Hospital, an NPO, rendered medical services to 100 dengue patients. So the fair value of those services is 100,000. So those patients, in addition, are covered by an insurance company in full, meaning these dengue patients will not pay anymore to the hospital because their bill will be answered by the insurance company. But there is an addition again, but based on the agreement of BBM Hospital and the insurance company is just to pay 9,500 per patient based on the insurance company's policy. Again, Baby M Hospital and the insurance company agreed on it. So, only 95,000 will be paid to the NPO. So, that's 100 patients times 9,500 each. So, if we compute it here, this 5,000 that will not be collected by the Baby M Hospital will be considered a contractual adjustment. And I hope you got it. And that's it for contractual adjustments. Now let's go to employee discounts. So this is also self-explanatory because these are just discounts given to employees or immediate family members of the employees. So that's it. Now let's go to the last one immediately. So the last one is the billed charity care, which is also self-explanatory because these are just free medical services to qualified beneficiaries. Like for example, a free medical checkup program for the poorest of the poor or something like that. And that's it for the net patient revenues. Again, gross billings, less contractual adjustments, less employee discounts, and less billed charity care equals the net patient revenues. And that's it. But before we proceed, guys, again, the revenues of the healthcare NPO consists of Puno. So we're already finished with the premium revenues, unrestricted contributions, and the net patient revenues. Now let's go to O, or other revenues. Actually, healthcare organizations can earn other revenues, like rental revenues from specialist doctors who rents their office space from the NPO hospital, or revenue from cafeteria of the hospital, or revenue of the pharmacy of the hospital. So those are just examples. There are a lot more examples. And that's it. So in summary, so far, we have learned that each of these HEVO has some unique accounting features. And so far, we have learned that other NPOs or those that are not healthcare organizations, not voluntary health and welfare organizations, or not an educational institution, follows everything that we have discussed so far in the previous episodes. And on the healthcare organizations, we have learned also that there are only two accounting peculiarities. First is that instead of statement of activities, the healthcare NPOs prepare statement of operations, which only focuses on revenue and expenses. And the second one is that the revenues of the healthcare NPO consists of puno. Okay? So let's stop here to make the video short. So in the next episode, we're going to talk about the unique features related to the accounting of educational NPOs and voluntary health and welfare organizations. But before we end this video, here is an assignment for you. This assignment will also be answered in the next episode. So the assignment goes like this. So we have BBM Hospital and NPO bills for the following: 600,000 for services rendered to patients, 500,000 of which was charged to PhilHealth Insurance Corporation. It is estimated that only 530,000 will be collected by the NPO. So BBM can only collect 465,000 from PhilHealth, and employee discounts is 5,000, and the charity care is 20,000, and the 10,000 is doubtful for collection. And number two, BBM also billed 1,000 per employee of BBG's corporations, 100 employees, but only 60 employees availed of the medical services. And aside from the above transactions, the following also occurred. Sales of 110,000 from gift shop and cafeteria happened, and BBM also received 15,000 dividends from donated shares. Shares are restricted, but the dividends are unrestricted. And letter C, a professional accountant donated services worth 30,000. And lastly, we have the BBM hospital received medical supplies worth 10,000. So the requirements are compute for the following. We have the net patient revenues and the total revenues of BBM. So answer that, and that's the end of this video. So if you learned, please click like, subscribe, and hit the notification bell to be updated on my next videos. And thank you for watching, and see you on the next one.